Well, the old renovation at home, you need to do a little bit of research before you get stuck into it all, but good luck with all of that. Joining me in the studio at the moment, Mark Potter. He is an Associate Director at Baker Young Stockbrokers. Mark, good to have you in again.
Thanks very much, Tim. Good to be here.
Well, let's get things started with some of the discussions about what is happening in the share market at the moment. Right now, a little bit of pain going on. I mean, it's been good for a couple of months, but what is happening at the minute?
Yeah, so I suppose in the financial year to date, the market's had a pretty good trot, sort of putting on gains of about 25% through to about the middle of March, late March.
Good positive stuff?
Yeah, good positive stuff. Been driven mostly by what we call the defensive sort of areas of the market, the stable sort of stocks. You know, a lot of the banking stocks have improved markedly over that period. You know, 50, 60 and 70%, some of those stocks. And what we're seeing is a little bit of sort of rotation. The market's now sort of in a state of flux. What's going to happen next? A little bit of profit taking happening in some of those areas which have performed very well year to date. And you know, some changes happening with our currency, for example, interest rates going down lower.
Yes.
You know, so what's happening next? So it's in a stage where I suppose we'll work out where the next leaders are going to come from in the near future.
In terms of the market worldwide, how do you feel we're sitting still? I mean, obviously the Reserve Bank's wanting to adjust our currency at the moment, but you know, how are we placed in regard to other markets around the world?
So I suppose if you go back to, say, the economic cycle, Australia's growth rate's been pretty good, driven by the resource boom and all the investment that's gone along with that, and that's obviously tapering off at the moment. And you know, some people would say it's falling off a cliff because there's a lot of projects being deferred, major investments that are being deferred. And for good reason too. You know, these new developments are expensive. So from an Australian point of view, there's going to be some tapering off in growth going forward. However, from the US point of view, the major driver of the world economy, they're just starting to pick up a head of steam. So it's sort of a bit of a balancing act. You know, the stock market, despite the fact that the Australian economy might be a bit weaker over the next year or two relative to where it's been, the stock market should perform okay.
I guess just taking that balancing act that you're talking about into thought. Obviously, with the dollar coming down, our exports start to benefit a little bit more, and presumably the mining sector and other industries might start to flourish a bit more on the back of being able to push product out at better rates.
That's right. Well, so there's a lot of. So if we take a mining company, for example, a BHP is a good example. You know, they've got a lot of pressures on them, and levers that are, so they're reducing spending and reducing the capex investment at the moment, which is good. So retaining that cash. Commodity prices have come off a bit, and might go a little bit lower yet. But generally speaking, we think it's probably not huge amounts of downsides in commodity prices, but that's putting a bit of pressure on them generally. And then you've got finally the Australian dollar sort of giving it up, so to speak, and looks like it's ratcheting down to a new sort of medium-term level. You know, perhaps in the low 90s, somewhere like that. Perhaps it gets back to 85 over the next couple of years. You know, that means that the sales revenue that they're going to get per tonne is going to increase quite dramatically from the end product. So that works well for them.
I guess in amongst that, there's a message there to anyone who's looking to travel too. Get out there and do it now.
Yeah, well, and you may, to be perfectly honest, you probably missed the boat, so to speak.
True.
And if you're on the last boat, whether you're spending those dollars where Anthony obviously is at the moment,
that's right.
Well, good timing.
Just on, we've talked. You've mentioned BHP and the like, but are there any particular shares that you like at the moment that people should be thinking about? You've said that the banking's come off a little bit, profit making or profit taking, I should say, along the way. What are some of the shares that people should keep their eye on at the moment?
Sure. So I talk about this sort of rotation of perhaps the real investor appetite. I mean, firstly, say the market comes off a little bit more from where we are over the next couple of months, which could easily happen. Then if there is a big sell down in some of those high yielding quality banking stocks, quality defensive stocks, no problems going out and buying a few of those for the medium and longer term.
Yep.
You know, you're not going to get the sort of growth we've had the last 12 months out of
Sure.
them, but they're still going to be, you know, they're still quality companies with great balance sheets,
Yeah.
and they're going to be paying high fully franked dividend yields. And to be honest, you know, fixed interest rates in Australia look as if they're low at the moment, and they might go lower yet. They're probably going to remain lower for some time. So those sorts of stocks are still going to give you a reasonable return. In terms of the higher capital growth areas, you're probably looking for some of those sectors which are sort of related to mining and resources,
Yeah.
which are really, you know, haven't performed over the past 12 months. They're quite bombed out at the moment.
Yep.
You know, a little niche play, for example, at the moment, I think, is perhaps the gold sector.
Right.
The gold index, would you believe, is down something like 65% over the past 2 years.
Okay.
Relative to the gold price, say down, about 30%. So the gold sector's, you know, on its knees at the moment in terms of the equity valuation that we're seeing at the present stage. And, you know, there's, you know, from a contrarian viewpoint for longer term value, you know, something like Newcrest Mining as our leading gold producer is very cheap. A mid-cap play, something like Beetle Resources, offers, you know, should be highly profitable out of its new operations despite lower gold prices, and should offer investors some attractive growth opportunities.
Yeah, I mean, it's interesting, the mining sector, you know, we hear so much about it, fluctuating one way or another, but at the end of the day, the things that they're taking out of the ground don't disappear, whether their projects are moving forward at a speedier rate or a slower rate, depending on, you know, what they can supply the market with.
Yeah, so I mean, BHP and Rio, for example, are great examples. You know, dominant world suppliers of iron ore. A lot of focus on the iron ore price and where it is, and you know, it's obviously come back a fair way. But BHP and Rio are pulling that stuff out of the ground for $40 and $50 a tonne, at $120 a tonne. Even if it goes back to $100 a tonne, they're still making really good money.
Yeah, yeah, it's interesting. Just to round off that part of the discussion, which shares are you a little bit hesitant about at the moment?
Look, I just think you've always got to be careful. Get some good advice. You know, the difficulty is when you go into a company that's just basically got too much debt, and conditions change so that, you know, the margin's not there for that business anymore.
Yes.
And all of a sudden, you know, they're at the whim of the bankers as to, you know, whether they're a going concern or not.
Yeah, one tumble and the whole...
Exactly right.
Yeah.
So I'd just say, look, it's probably become more of a stock picker's market, and, you know, important to get some good advice and seek some direction.
Hence, come and see you.
You can always call me.
Stay with me. We're going to go and have a look at some of the properties that have sold through the week in our Going, Gone segment.